Ladies and gentlemen, welcome back to the channel. Here in this video, we will discuss what happened to Tesla stock today, some of the continuing ongoing drama politically with Elon Musk, and what the latest is on that. We did have some more news in after hours on trade and certain things that could affect the markets we will also discuss. And Tom Lee says that Tesla is... well, there's no other Tesla. That he thinks Tesla is just getting started. So we have a lot to get into in a short amount of time. Hit that like button and subscribe to the channel if you have not done so already. If you guys want to come trade with me live in real time, check out that link down below in the description of this video. I'm sure by now you have heard the whole spiel, but if you have not already, what we are doing over there is finding small cap winners. It's as simple as that. We are finding them. We are winning doing this strategy. And I think it's only just getting started. I think AI is clearly about to have a super cycle. And I think some of the AI stocks that are sub $1 billion, that are actually great companies, just undiscovered, are going to be some of the biggest returners in the next 6, 12, 18 months or so. And that is where we are investing capital, going through the bad companies, Xing those off, and finding the good ones. So every time I make a trade, I do send out alerts, whether it's short-term, long-term, medium-term, and really most of these trades that I'm making right now are medium-term. They're like a 12, 18, 24-month time horizon that may very well turn into long-term holds, depending on obviously what happens. So let's go ahead and get started with everything you need to know about Tesla and markets right now. So first things first, I do want to share this clip with you from Tom Lee. It says here that Tesla and Bitcoin are just getting started. Now, I'm only going to share with you what he says about Tesla because I think it offers a very unique perspective, and I think you should hear this. If nobody else showed you, you're gonna see it here.
If we look at the risk reward of Tesla, what is your assessment of the stock, particularly given that a lot of the locals here are interested in your view? I know you don't talk about specific stocks, but do you have any view? Yeah.
Can I see, can you raise your hand if you own Tesla? Got it.
So majority?
Yeah. Well, I think Tesla is one of the most important stocks in the market because not only because of what Tesla does. Remember, Tesla is making electric cars, and they have a huge advantage. I mean, they completely changed the automotive industry, not just because they made batteries better. It's also because they have expertise in manufacturing. Now, manufacturing for cars is one of the hardest things to do because of the supply chain. So if they can dominate manufacturing of autos, Tesla will dominate whatever industry requires manufacturing in the future. Okay, that's the way you should think of it, that they have intellectual property that allows them to produce anything that the world makes at a lower cost. Like, for instance, if they decide to make smartphones, I would assume they could actually be one of the most efficient producers of that. They have a huge lead in AI now because of Twitter and their XAI. And with full self-driving, it is strengthening the capabilities of their artificial intelligence. They might even integrate Grok into that. And now they have Optimus Prime and robots. And they are, by a country mile, leading in the US in terms of robots. There was companies like Boston Dynamics that was working on these things a lot earlier, and Tesla has already surpassed them. So if you ask me, Tesla represents a company that knows how to take technology and then turn it into real world products. But they're now at the intersection of everything that's important because Tesla is linked to Starlink and to space and to Neuralink and to the Boring Company, all the things that Elon Musk is doing. And I think that that's the second part of the story, that We know if you look at the last, 100 years, the stocks that changed the world were really led by a founder that did see the world differently. So I think Tesla, as long as Elon Musk is involved, is one of the most important companies. So
here in the news today, the latest Trump threats could lift the tariff rate closer to 20%, Deutsche Bank says. Donald Trump's Truth Social, or DJT, has officially filed with the SEC for a crypto blue chip ETF. It will include 70% Bitcoin, 15% Ethereum, 8% Solana, 5% Crow, and 2% XRP. Trump on Truth Social said this: a new study by the Council of Economic Advisors, led by highly respected chair Dr. Stefan Moran, has found that tariffs have had zero impact on inflation. In fact, the study shows that import prices are actually dropping, just like I always said they would. The fake news and the so-called experts were wrong again. Tariffs are making our country boom. Many new factories, jobs, and trillions of dollars in investments are pouring into the USA. Someone should show this new study to, quote, too late Jerome Powell, who has been whining like a baby about non-existent inflation for months and refusing to do the right thing. Cut interest rates, Jerome. Now is the time. Elon Musk says that releasing the Epstein files will be a priority of his New America Party. Elon Musk also said earlier today that, quote, how can people be expected to have faith in Trump if he won't release the Epstein files? So it does seem like Elon continues to bash the current political landscape, and that continues to be a drag on Tesla's stock. Even as what we've seen today, Tesla was up over 3%, and then Elon started saying stuff politically on X, and it just triggers an automatic sell from the algorithms. That's what it seems like to me. Anytime Elon says anything about politics, boom, the stock starts to sell. Now, even if it doesn't have a 6% negative day, if it's not a terrible day, it has the risk of ruining, good days, which it kind of ruined part of the rally we seen today. For like 90% of the day, Tesla stock was up above $300 per share. It closed today below $300 per share at about $297.81 here and after hours. So, it is still having an effect on Tesla. But I want to be very clear about this. There's only so much damage that can be done via Elon's politics. I will ask you this simple question. Do you think Elon's politicking is going to hurt robotaxi in a substantial way? No. Is it going to hurt Optimus development? No. Is it going to cancel the Model 2? No. Okay? I don't think, and personally, I don't think people are just going to say, hey, I don't like Elon, so I'm not going to buy a Tesla. Like, if you want to buy a Tesla, you're going to buy a Tesla. Okay? And there's nothing anyone can say to you that will change your mind on that. So I just don't think it is that big of a deal. But hey, I would rather not see Elon talking so much politics. But if that's what he wants to do, then so be it. I do think the big catalyst for Tesla stock is Tesla's earnings. And that's when we get clarity on when the Model 2 is coming, what the scaling process could look like there, but most importantly, in my view, what the scaling, environment next year in 2027 is going to look like for robotaxi. That is the big catalyst for Tesla stock at this point. That makes the difference between, I believe, Tesla being a $600 stock by the end of this year, like seeing a massive rally over the next couple of months, or seeing Tesla not do much of anything. If Elon comes out and says, yeah, we could have 50,000 robotaxis out on the road next year, or 20,000 even, I think Tesla is going to explode on that, right? Because they're already doing it. They're already out on the road. Now, if Elon provides a little bit more clarity on how we get to that number, that would also, be great. If Elon says, hey, we didn't forget about the Model 2. We didn't forget about the cheaper Tesla. We're just getting it right. And that's coming by the end of this year with, huge ramping and scaling next year. Like, I think that's going to be enough to send Tesla on a pretty parabolic rally. Now, it also looks like Tesla is sending out more invitations for the robotaxi network for individuals to come and try out the robotaxi. Tesla confirms on X that FSD transfer is still available right now. So on top of, the $7,500 tax credit that ends on September 30th, and all of the other promotions that Tesla may be running, you can also transfer FSD if you were unaware of that. And Lucid has set a Guinness World Record for the longest drive on a single charge. The Lucid Air Grand Touring drove 749 miles between St. Moritz and Munich without a single charging stop, and included alpine roads, highways, and secondary roads. It was just a normal Lucid Air Grand Touring 512-mile EPA range car with no special customizations or anything to it. This beats the previous record of 650 miles. Now tomorrow, July 9th, we are going to have wholesale inventories month over month. You're expecting negative 0.3%. You do have a 10-year bond auction, which could be kind of important. It could move your 10-year treasury yield, which can have an impact on stocks. And you do have the FOMC minutes that comes out at 2 p.m. tomorrow. But the minutes really are usually not important. It's usually a non-event for markets because it's old info. Like, we never get anything new from the FOMC minutes. Maybe we could this time around, but typically it's just a nothing burger. Like nothing tends to happen. And since we started this video with Tom Lee's take on Tesla, why not end it with Tom Lee's take on the broader markets? He says the market remains the most hated V-shaped rally ever.
Turmoil, and whether it's still going to hit the economy and the stock market or not. Let's ask Tom Lee. He's FundStrat's Chief Investment Officer and Head of Research. He's here with us at Post 9. In the market, good to see you, by the way.
Great to see you.
The market clearly doesn't think that tariff turmoil is going to hit the economy and stocks. Is that the right way to think about it?
Well, I think the economy, we've had enough data to know that the tariffs aren't necessarily hurting the consumer wallet or hurting jobs growth yet, but we're just waiting for, as Fed Chair Powell says, to see how it shows up in inflation. So I think the next two inflation reports are going to be closely watched, because if we don't see a meaningful pickup in core inflation and consumer inflation expectations don't move up, then it's going to give the Fed a lot more comfort about cutting over the next 12 months, and that would be good for stocks.
The president continues to talk tough as it relates to tariffs and his trade war. The market, I think, is continuing to reflect a "I don't necessarily believe you" mentality, that the tariffs are, in fact, going to end up on August 1st, as bad as they sound today or may sound in the days leading up to August 1st. Is that how you think the market is taking it right now?
Well, I think the market's somewhat pragmatic, and they realize the president is making statements to try to force negotiations to come to a close. But at the same time, the president is practical and knows that he doesn't want to upend the economy. So I think the market is trying to manage that balance. And yesterday was a day where they weren't so sure. That's why I think we had a lot of selling. But I think, as time passes, I do think at the end of the day, we expect the White House to find something that is a good balance between the two.
All right. So you're going on the idea, it sounds like, that you think tariffs aren't going to be as bad as the bark would suggest. Is that at the end of the day? Is that right?
That's right. I mean, tariffs are already annualizing $2.4 trillion a year, which, if you now compare it to where the budget is, it's actually neutralizing, the current budget. But it hasn't hurt the wallet and consumer confidence, and it hasn't hurt S&P earnings. So I think at the end of the day that we've had enough time pass that investors can sort of breathe a little bit of a sigh of relief and realize the tariffs, they're important to the White House agenda, but they're not going to necessarily derail the economy.
What if there's too much complacency around that? Got a VIX at 16. You said it's too soon to tell. That's why Chair Powell is waiting to see what happens with inflation. What if we just don't know yet what the real impact on the real economy is going to be?
That's true. I mean, that would be a negative fork if that were to happen, and I think the VIX would go up.
Well, I mean, isn't that a real possibility? I mean, actually, it's a certainty. Today, we don't know. Do we?
Well, and Scott, I mean, if we went down that path, then it would also open the door for the legal challenges to come back about what kind of tariffs can be levied without an appropriate process. So I think at the end of the day, look, investors should keep that in mind, but then they should realize we had a black swan develop in April.
April 2nd.
April 2nd, a waterfall decline in stocks. The VIX went to 60. And everyone thought the market wouldn't recover because the Fed wasn't going to unleash liquidity, but it was a V-shaped rebound. So if that should be in people's back of their mind, they shouldn't be too bothered, even if we get a bad chapter in this tariff story.
What's priced in at this point? I keep hearing from people, well, a lot of the good news now, given the rally back and the V-shaped recovery that you said, now all of this good news is priced in. Is it?
I mean, I'd say that the ones who are saying it's priced in are a lot of the folks that missed the rally. We speak to a lot of high net worth and hedge funds. Many have missed the bulk of that rally, and they are very skeptical here.
They're mad and they're hating on it now?
Yes, that's why it is the most hated V-shaped rally ever. I mean, worse than 2020 and 2022. But I'd argue that the PEs should be expanding. The median PE, the S&P, is lower than it was on the eve of COVID 2020 by 1.5 turns. Mm-hmm. So the market's cheaper, and we had 6 black swans. We had COVID, we had the supply chain shock, we had the inflation shock, the Fed's fastest hikes in history, we had Trump Armageddon, and then we had the U.S. bombing Iran nuclear facilities. 6 black swans. Mm-hmm. The market produced earnings growth the entire time. If this was a stock, we would say it's sort of indestructible, and we should give it a higher PE, but the market derated.
I'm writing down as you were answering that question. Can the multiple expand while earnings and margins are contracting? Can that happen? Because margins are probably contracting a bit, right? I mean, unless you're passing through all these costs to your customers, which I think a lot of companies are reticent to do. Earnings, we know, are contracting because estimates have come down by near half.
Yeah. Now, on the margin side, you have to keep in mind that if, let's say, companies are eating half the tariffs, the gasoline already offsets that. So I'd actually say there's no margin risk from the current level of tariffs.
No margin risk at all from now?
Yeah, I mean, on balance, because there's 500 companies, but I would say it's offsettable because of the way some of the commodities have deflated. So I think earnings growth is actually still intact.
But sure, we are going to have earnings growth. Growth is intact at far slower levels than we were once thinking.
However, we also know that ISM has been below 50 for 29 months, a record period below 50. And that is highly correlated with S&P forward growth. So if we get the tariffs issue settled and the Fed breathes a sigh of relief, starts cutting, and the ISM moves above 50, I think earnings estimates for next year actually go up.
And of course, I mean, Tom Lee makes very compelling arguments. It's hard to argue with that. I would just add in there, I think an AI supercycle is coming. I think we're going to start to realize some of the productivity gains, just how, wide-reaching AI adoption is going to be. I think AI is second to the internet, maybe first to the internet in terms of how much it's going to change the world. Okay, I know it sounds crazy. Like the internet changed a lot, like pretty much everything. But I do think, AI is going to be a huge disruptor for a lot of industries. And, well, as long as AI does not go rogue, be a big beneficiary to humanity. So I think it's a theme that is going to start gaining a lot more traction as rates come down. And I think Tesla is at the epicenter of that. There are, again, still questions we have. Like, what does scalability of robotaxis look like, right? What does, the Model 2 look like? Is it going to be robotaxi capable? What's the scaling process going to look like from that? Because Wall Street hasn't totally just threw out the car business, but I do think we are kind of in the start of a transition where we're going to focus less on the car business and more on Tesla's AI prospects. So let me know your thoughts on that. all of this down below in the comment section. Again, if you guys want to come trade with us, every time we make a trade, I send out alerts. Check out that link down below in the description of this video. Have a great rest of your day, and I will see you in the next one.